The first sign of collapse is always silence. Not an explosion, not a headline, just a faint distortion in the background of daily life. Prices shift ever so slightly, shelves thin, wages lag behind promises, and people tell themselves it's temporary. But silence is where every monetary disaster begins. Before the riots, before the bank runs, before the empire understands it has crossed a line it cannot uncross. Imagine a world power standing on a mountain of debt so tall it can no longer see the ground beneath it. Its currency, once a symbol of strength, starts to tremble like a bridge under too much weight. Traders sense it first, then pensioners, then families clutching paychecks that evaporate between the register and the parking lot. But the government insists everything is fine, because admitting the truth would be admitting the one thing no state can confess: its money is dying. History rarely repeats with the same costumes, yet its rhythm never truly changes. The Roman denarius didn't collapse in a single day. It eroded slowly, grain by grain, purity dissolving as emperors shaved silver off the edges to pay for wars they couldn't afford. Citizens woke up to find their savings worth less than yesterday, and even less the day after. But they kept playing along, because the alternative, acknowledging that their rulers had turned the currency into sand, was unbearable. Weimar Germany followed the same script with different props. What began as manageable inflation became a firestorm when the government discovered it could print its way out of political consequences. A loaf of bread that cost a mark became 10, then 100, then 1,000,000. People carried wages in wheelbarrows, yet the architects of the catastrophe insisted they were restoring stability. And now, in our world, we stand in the opening seconds of another silent collapse. No empire believes its currency can fail. No government imagines its people will one day look back and ask, how did they let this happen? But debasement is never born from malice. It begins with convenience. Leaders discover they can create money faster than they can raise taxes, faster than they can cut spending, faster than they can tell the truth. The machine hums, liquidity flows, the public feels relief, and the cycle tightens around them like a velvet noose. Every collapse begins with a moment of collective denial. Citizens cling to the myth that their leaders are in control. Governments cling to the illusion that manipulating money will buy them time. But time is the most expensive currency ever created, and no amount of printing can purchase more of it. The doom doesn't arrive when the currency breaks. It arrives when trust breaks. When households stop believing the numbers in their bank accounts represent real value. When savings become a joke whispered at kitchen tables. When the quiet fear in the population sharpens into a single question: if money is a promise, who broke it? This is the world just before the fall. An empire pretending its foundations are unshakable while cracks spiderweb beneath the surface. Politicians blame foreign adversaries, greedy corporations, natural disasters, anything except the simplest truth. A government that controls its money will always choose its own survival over the survival of the currency. And once that choice is made, collapse is no longer an event. It is a destination. The pattern always begins quietly, with a decision made far from the public eye. A ruler, a senate, a council choosing to spend more than reality allows. At first, the gap between ambition and resources is manageable. A new road, a new war, a new social program, each justified as temporary, each defended as necessary. But once the state discovers the hidden lever of monetary manipulation, history shifts from coincidence to choreography. In ancient Rome, this choreography played out with brutal simplicity. The denarius, once a near-pure silver coin, slowly became a hollow echo of its former self. Emperors shaved just a fraction off the purity, 3%, then 5%, then 10%. Each reduction felt harmless, even clever, like finding money under a mattress. As long as the coin looked the same, who would notice? But the people did notice. Prices rose, workers demanded more, markets distorted. And every time reality pushed back, Rome debased the currency again, accelerating a feedback loop that lasted centuries. The empire didn't collapse from one bad emperor. It collapsed from a monetary pattern too irresistible for any emperor to resist. The same mechanism appeared across every major civilization, like a shadow embedded in the architecture of power. Medieval kings clipped coins to fund wars that outlived their treasuries. The Qing dynasty diluted copper cash until inflation became a national torment. In France, before the revolution, the monarchy printed assignats with religious optimism, each new issuance justified as the last one, each one pushing the economy closer to combustion. Then came Weimar Germany, where the pattern reached operatic extremes. Politicians promised stability, but the printing presses outpaced the promises. Inflation mutated into hyperinflation. Savings evaporated. Entire classes of society were erased in a financial flash. Yet the pattern was always the same: overspend, debase, deny, collapse. Every government, regardless of culture, ideology, or geography, confronted the same temptation: the ability to conjure money without earning it. It is the political equivalent of a drug, first used cautiously, then habitually, then uncontrollably. Monetary manipulation becomes a survival mechanism. Leaders fear the consequences of discipline more than the consequences of distortion, and so the distortion grows. But what makes this pattern so deceptive is its initial reward. When a government expands the money supply, the economy feels a momentary warmth, like the flush before a fever. Borrowing becomes cheaper, markets swell, wages rise just enough to calm the population, politicians declare victory. But beneath the surface, the currency begins to hollow out, the same way Rome's silver did. The people sense it instinctively, but lack the language to articulate it. They describe it as, "things feel more expensive," or "money doesn't go as far," never realizing they are experiencing a sacred historical script unfolding in real time. The terrifying truth is that civilizations don't learn this pattern. They repeat it. Not because they are ignorant, but because those in power benefit from the early stages. Inflation rewards the state first and punishes the public last. It transfers wealth from savers to spenders, from workers to rulers, from the many to the few. And every government, no matter how noble it claims to be, eventually rationalizes the same betrayal: that the short-term necessity of control outweighs the long-term stability of sound money. So the pattern persists, century after century, empire after empire, each convinced it is smarter than the last, each convinced it can outmaneuver the arithmetic of economics. But mathematics is the one adversary no government has ever defeated, and the cycle always ends the same way, with a population asking how their prosperity vanished, and leaders insisting no one is to blame. The past isn't just prologue, it's a mirror. And when we hold that mirror up to the present, the reflection is unmistakable. The same fractures that once split empires now run through the arteries of modern nations, pulsing with a familiar rhythm. Debt that grows faster than GDP. Governments that spend more than they collect. Central banks that promise stability while quietly drowning the system in liquidity. We've seen this all before. The costumes have changed, but the choreography has not. Look at the United States, the world's reserve currency backed not by gold or discipline, but by confidence. A fragile resource that evaporates faster than ink dries on a $1 trillion spending bill. The national debt spirals upward with no ceiling, no pause, no pretense of repayment. Each crisis becomes an excuse to print, borrow, inflate, and repeat. Politicians from every party insist it's necessary, temporary, manageable. That's exactly what Rome said when it shaved the silver from the denarius. Exactly what Weimar said when the first batches of banknotes rolled off the presses. Across the Atlantic, the European Union dances to the same tune. Nations bound together by a currency they do not fully control, each one pressured to intervene, stimulate, and adjust reality to keep the system intact. The European Central Bank swears its interventions are limited and scientific. Yet every year, the balance sheet swells like a lung inhaling too deeply. In Japan, decades of quantitative easing have created a surreal world where interest rates barely exist, growth is engineered, and the line between monetary support and monetary dependency has evaporated entirely. And it's not only the economic numbers that expose the parallel, it's the psychology. Citizens everywhere feel the same unease that haunted collapsing empires throughout history. They sense that prices shift faster than wages, that savings buy less with every passing quarter, that governments speak in the calm language of stability while standing on foundations made of political sand. People can't always articulate the danger, but they feel it tightening around them like invisible static. Meanwhile, central banks perform their rituals: press conferences, forecasts, charts calibrated to 3 decimal places. But behind the glass panels and diplomatic language lies a truth ancient and unchanged. Once a government discovers it can manipulate money without immediate punishment, it becomes addicted. Liquidity becomes oxygen. Debt becomes currency. Printing becomes policy. And policy becomes survival. Today's leaders are not malicious. They are desperate. They inherited systems built on promises impossible to keep without monetary distortion. Pension obligations, entitlement programs, endless wars, corporate bailouts, crisis responses. Each one adds another layer of weight onto a currency already straining under the burden. They cannot reverse course without triggering political revolt. They cannot continue without triggering monetary decay. So they choose the decay. Slowly at first, then all at once. We have seen these film reels before. A society drifting into denial while the pillars silently weaken. A population told everything is stable, while the numbers whisper otherwise. A government insisting its control is absolute, while losing control inch by inch. The grim parallel is this. Rome believed it had centuries left. Weimar believed it had months. Modern nations believe they have tools their ancestors lacked, but the arithmetic is older than every empire combined. What we are living now is not an anomaly. It is Act 2 of a script written thousands of years ago. The names have changed, the currencies have different faces, the buildings are taller, the technology shinier, the speeches more sophisticated. Yet the pattern, the debt, the debasement, the denial, remains perfectly preserved. And if history is the guide, the next phase is already in motion. Every government claims to serve the people, but money reveals the truth. Sound money is a chain on political power, an unforgiving boundary that no leader, no empire, no ruling class has ever tolerated for long. Because sound money demands honesty. It demands restraint. It demands that governments live within the limits of what they can tax, not what they can invent. And that is precisely why no government wants it. Behind every monetary collapse, behind every inflationary spiral, behind every temporary emergency program that somehow becomes permanent, lies a single, unspoken motive: control. Not in the cartoonish sense of villains twirling mustaches in a dark room, but in the cold, bureaucratic, calculating sense. The kind of control that allows a state to rewrite the rules of reality without asking permission from the citizens who must endure the consequences. Sound money removes that power. It forbids quiet manipulation. It exposes irresponsible budgets. It limits war. It forces politicians to tell the truth. And the truth is the one currency no government can afford. When a nation adopts hard money, Gold, silver, or any form of currency that cannot be conjured out of political will, it places a ceiling on itself. It cannot dilute savings to pay for its failures. It cannot inflate its way out of recession. It cannot bribe voters with benefits financed by invisible taxes. It cannot overspend today by stealing from tomorrow. Hard money turns the government into what it fears most, an institution forced to live within its means. Inflation is the perfect opposite, a silent tax, a pressure valve, a political anesthetic. It erodes purchasing power slowly enough that most citizens blame the supermarket, not the treasury. It transfers wealth from savers to the state, with the efficiency of a vacuum hidden under the floorboards. It allows governments to purchase obedience, stimulus, subsidies, bailouts, while insisting the bill will never come due. And it always comes due. The revelation is that inflation isn't an accident. It isn't mismanagement. It isn't a policy failure. It is a strategy, an unspoken pact between governments and the financial elite who orbit them. Politicians need money without limits. Central banks provide it under the guise of stability. Corporations benefit from cheap credit. Banks profit from asset inflation. And ordinary citizens, the ones who actually produce the real value in society, absorb the cost. This is not a conspiracy of individuals. It is a conspiracy of incentives. Nobody needs to coordinate. The system itself demands the same outcome. Expand the money supply, suppress dissent, preserve the illusion. Sound money threatens this equilibrium. It strips away the state's ability to wage endless wars, to bail out failing institutions, to rescue markets from their own excesses. It strips away the elite's ability to accumulate wealth through financial engineering instead of productive work. It strips away the political class's ability to promise more than reality can deliver. It forces accountability. And accountability is toxic to power. This is why every government in history, monarchies, republics, democracies, dictatorships, eventually chooses the same path. They begin with discipline. They continue with excuses. They end with inflation. Because inflation is easier than courage, safer than transparency, and more profitable than truth. It gives rulers the ability to rewrite the future without the consent of the people living in the present. So when leaders say sound money is impractical, what they mean is it would expose us. When they say it's too rigid, they mean it would limit us. When they say it doesn't allow flexibility, they mean it stops us from using your savings as our emergency fund. The revelation isn't that governments dislike sound money. The revelation is that sound money would make them mortal. And no empire in history has surrendered immortality willingly. Every monetary regime ends, not because the numbers stop adding up, but because the people stop believing the story. Confidence is the true currency of nations, and once it cracks, collapse accelerates with a frightening inevitability. Yet within that inevitability lies a strange paradox. The closer a system is to breaking, the louder its architects insist that everything is under control. It is the final act of every empire, the calm before the self-inflicted storm. Today, we stand in that quiet tension. The graphs bend upward, the debts expand beyond imagination, the cost of living drifts further from the average worker's reach, and the governments of the world respond with the same ritualistic reassurances. This is temporary. This is manageable. This is normal. But arithmetic is not negotiable, and sooner or later, the old world of elastic money will reach its breaking point. When it does, the reset will not arrive as a single event. It will arrive as a sequence. Currencies losing credibility one by one, nations scrambling to defend their purchasing power, institutions once thought invincible revealing their fragility. The public will search for explanations, but the true cause will be the simplest, oldest truth in political history. any system built on the ability to print without consequence eventually collapses under the weight of its own illusions. But there is another truth, one less grim, more ancient, more enduring. Whenever a monetary order dies, something stronger rises from its ashes. After Rome's debasement came Byzantium's gold solidus. After Weimar's hyperinflation came a new currency anchored in discipline. After every collapse in history, individuals who understood the cycle, who recognized the warning signs early, preserved their wealth, while others lost everything. The inevitability of collapse is terrifying. The inevitability of renewal is empowering. Sound money has always reemerged, not because governments favor it, but because reality demands it. When trust evaporates, societies instinctively seek anchors: gold, land, hard assets, digital scarcity, anything immune to political manipulation. These anchors become the seeds of the next monetary era. And those who adopt them before the reset are not merely observers of history, they are survivors of it. The future will not be shaped by governments rescuing the system. It will be shaped by individuals refusing to drown with it. People who diversify beyond fiat promises. People who prepare instead of hope. People who understand that the end of one currency regime is not the end of the world. It is the end of a lie. And when the dust settles, when the charts finally crash to earth, when the authorities who denied the danger stand before the ruins they helped create, a new order will form, one built not on illusions, but on limits. It may be backed by commodities. It may be decentralized. It may be a hybrid born from crisis. But it will be anchored in the same principle that has outlived every empire. Money must be real, or it will eventually die. This is the inevitability governments fear, but it is also the opportunity individuals can seize. Because while no government wants sound money, history shows that sound money always returns. And when it does, it rewards the few who saw the collapse not as an ending, but as a turning point. The reset is coming. The question is not whether you can stop it, but whether you can prepare for what comes after.